All right, banks are participating, but we are, some distance away from where yesterday's high was. So let's bring up the markets for you. We are 115 points, 24951. Now, if the bank Nifty continues to contribute and if IT doesn't sulk too much further, we might well have a dash at 24 or rather 25,000. So let's wait and watch. IT's been a bit of a sulker, though even that's recouped a bit of lost ground. So, well, let's see. Does the last half an hour have the spunk to take the index to 25,000? Time will tell. Mid caps and small caps have actually done reasonably well, and I think the market breadth will show that too. Look at the mid cap index, 0.65%. The small cap index too, about 0.9%, doing very well, and as a result of which the advanced decline ratio has looked reasonably positive as the day has crossed. So, which is why I say this, that look at this, a bit of a pullback, and then I think the advanced decline ratios look good. Hersh will mark the mid cap and the small caps for sure, but let me just quickly show you what's happening on the large cap end of the market very quickly. Some notable movers there. Oil marketing companies, BPCL, IOC, HPCL, all of them have had a really good move. Maybe off the highs of the day, but still up 4%. So really strong show for that one. Tata Motors is the surprise mover, 3.5%. Ahead of the numbers, maybe because of a product launch, what have you, but doing very well. NTPC, yet another day of gains. Some strength for Adani Enterprises, HDFC Bank, Maruti ahead of the numbers tomorrow, and a lot more green than what was at the start of the trading day. What's gone down? A little bit of profit booking, maybe in LTI Mindtree, maybe Cipla. So Pharma just takes a bit of a step back after looking very, very robust for the last few days. But the moves really, while they've happened in the large cap space, are actually telling at the broader end of the spectrum. There are also a lot of result reactions and a lot of very swift movers being seen. Hersh, from a Varun Beverages to a Force Motors, a clutch of stocks moving around.
Absolutely, Niraj. You've named two of them, two of rather the biggest ones. Varun Beverages down 5+%. You're seeing Force Motors. What strong numbers coming through for a stock like that. There you go. In fact, the fall like a cliff, in fact, pretty much timed along with the results. So a result reaction on Varun Bev. Force Motors as well, up nearly 9% now. Results have just come out maybe a few minutes back. We're looking at Colgate, of course, stock of the day likely 5.5% higher. Jindal saw on the back of numbers almost 5.5% higher. All OMCs, but HPCL in particular, on the back of, again, its Q1 FY25 numbers, very strong, 4.5% higher. And Pfizer seeing 3.8% of gains today. Among the losers, you have Varun Beverages. We spoke about that. Indo Count is down 4% on numbers. Exide came out with numbers as well. Looking slightly weak there on the numbers count. Exide data patterns also down 2% odd. Just in terms of some of the other movers, ITD Cementation is one I really want to mark out. 3% higher, again on the back of an order win. The orders, especially in infra, don't seem to be stopping, and they just don't seem to be going away. Continuous order wins that we're seeing within that infra pack. Among others, some of the buzzers, Suzlon up 5%, mandatory. It's just been the case since the budget. And Nykaa also up 7.2% in trade today. HPCL we did mark out. Those are some of the top gainers on the Nifty mid cap. Some of the top losers, Policy Bazaar down 2% odd. Sumitomo Chemicals also down. We have Macrotech also down 2 odd %. So some of those are the top losers on the Nifty mid cap. But yeah, plenty of buzzers in trade today. But let me quickly bring on board both our analysts for the day. We have Aditya Agarwal from from Invest for Edu, and we have Kush Bora from kushbora.com. Welcome both of you. Good afternoon. Aditya, let me come to you first before I go to Kush. How are you viewing markets? Any chance that we clock a 25K today or maybe later this week?
Afternoon, Harsh. Afternoon, Niraj. Thanks for coming to the show. Afternoon, Kush as well. I think it's a matter of time before we scale past 25,000. Whether it happens today, tomorrow, time will tell. But the kind of momentum that we are seeing in the markets, Harsh, I wouldn't be surprised if we actually scale 25,000 in trade today itself. Though I know there are a lot of writing happening at 25,000, so it will take some kind of an effort from the bulls to touch 25,000 odd levels. But the kind of buildup that we are seeing in the markets after that initial fall in the opening trade, I think markets are all set to test 25,000, and I think can happen today itself. Looking at the way the banking stocks have started to participate in the second half of the trading session, and that is very encouraging. And if we manage to scale past 52,000 on the bank Nifty, that is where I think so the major short covering rally or maybe long build up we can see on the banking side. Look at the way most of these PSU banks have started to participate now, and HDFC leading the pack, of course. So names like SBI, PNB, you name it, and all of them are firing now. So I think I won't be surprised if actually we, while the show goes on and we see Nifty just scale past 25,000 during the show, and that could well be led by the banking stocks. I think banking is something that is looking good at the moment.
All right, so Aditya, Niraj, we have two on banking. Kush, your views?
Hey, hi, Hersh. Not as optimistic as Aditya, I'm afraid. No, the only reason, I'll tell you why, a couple of reasons. One, if you see the Bollinger Band, Nifty is on the upper end, and even 25,000, as Aditya already mentioned, has a massive call base. That does not mean that, the call base will not be taken out. If it does, then perhaps we'll see another 200 points on the Nifty. Bank Nifty rally, however, is testing some of the key, resistance areas. 51,800 to 52,200. I'm giving a slightly broad range here, but that's the range that the Bank Nifty has to perhaps cross and sustain above for this, near-term downturn to be negated. So I'm a little watchful on that. Plus this is the monthly expiry week for the Bank Nifty, so perhaps some rollover action taking place. That said, how do you trade? I don't think you can go long on Nifty just yet, because you're staring at that resistance mark of 25,000. So the risk reward ratio will not be as favorable. Bank Nifty does set up for a slightly attractive short trade, but as I said, given the momentum, I'd wait for another day, maybe two, to see 52,200 is taken out or not. So Nifty on the positive side, but the risk reward ratio does not allow a long trade. Bank Nifty is in a short covering rally, so we'll just wait and watch for the 52,200 mark to be taken out.
So in light of all of this, Kush, let me start with you. What are your stock recommendations for the afternoon?
Sure. Niraj, while we're at it, first a quick update. Yesterday in the morning show, we discussed Deepak Fertilizers for, I think, a second target of 895. Suddenly, it just might seem like a distant history because the stock is at 965, clocked almost 980 today. So if anyone's got an existing position, my suggestion would be to book it out now, because the stock's now approaching overheated territories. Also, Sun Pharma, the call that we had discussed for a second target of 1700, revised back to 1725, might be consolidating today, but I think the overall structure is very much intact. So if anyone's got that position, then I think you should hold on to Sun Pharma with now a trailing stop loss of 1675. For today, two calls. Kajaria Ceramics, beautiful structure. If you see on the weekly chart, there is a rounding bottom formation that is completed. The 1500 resistance, is being taken out. So I won't be surprised that if this stock indeed goes ahead and moves towards levels of 1800 also. But from a near-term perspective, 1575, 1625 are the levels to watch for. 1475 is where you place your stop loss. Now, given the slightly cautious outlook on the market, we have a short call as well, where Jindal Steel. We've seen a bit of a recovery in the metals pack, but it seems like a short covering rally. So take this opportunity to create a short position with a very tight stop loss at 995. Your targets on the downside will be 955 and 930.
Okay, JSPL short, and this is essentially balancing it out. Remember, metals today aren't necessarily the best. Vedanta is sulking as well. It's down about 1%, so keep that in mind too. Clutch of metal names have come off today. Aditya, your recommendations for the day. Excuse me, but I think we still haven't addressed them. So your stock ideas.
I've got a couple of buy recommendations, Niraj. The first one is Aarti Industries. Clearly going by the chart structure, it's a very strong going for the stock, and we have a fresh breakout on the stock. So I think at current levels, one can still initiate a buy, despite the fact that the stock is up 4%. We are seeing this move on extremely healthy volumes. So I think there is a continuation of the move that we are going to see. 790 is my target, 720 is the stop loss. The second stock recommendation is from the banking space, because clearly I feel that banking can start to see a bit of a outperformance from here on. So Indian Bank is something which is looking very interesting to me on the chart setup, on the verge of a fresh breakout into an all-time high territory. So 640 is my target here, and 580 is the stop loss.
There's something harsh with these chemical companies. Deepak Nitrite is at life highs today. Vinati Organics at life highs or 52-week highs today, if not life highs. Aditya just mentioned about RT Industries, so that's the third one. So chemical stocks seem to be having some spunk, and I don't know if this is a factor of the belief that the sector fundamentally is bottoming out because the price erosion due to China supplies might be easing off a little bit. Maybe that, maybe something else, but clear, serious moves in the chemical stocks. The last 6 months, almost any chemical stock, which is a specialty chemical stock, has had a fabulous move. RT is a case in point, Deepak is a case in point, a clutch of others. So quite serious moves there.
Yeah, I mean, when I'm looking at Chemplast, when I'm looking at Privy, all of them have moved quite sharply. So it's across both specialty as well as commodity chemicals.
Exactly.
Because Chemplast is commodity. So yes, that's interesting, and yeah, very likely it's pricing. But let's probably take a couple of quick views on some of these names. Kush, if I can come to you, your views on some of these chemical names, especially the kind of run-up they're seeing, any possible position that you're building in some of these?
Well, one of the names that you mentioned, Privy, it's been popping up on, some of our, filters, our screeners, on our radar for some time now. It's just that the volumes in this one aren't really as big to perhaps, warrant a call without moving the price too much. And hence, we've avoided that. But just purely speaking on the technical front, the stock's actually shown a very sharp move. There's been around the profit booking around the 20-day moving average, and then it's moved up ahead. So I think this is very well poised to move another 200, maybe 250 points from here on. So very good move on this one. Relative to what its volumes are, we've seen a very good accumulation over the last month and a half, 2 months. So Privy has actually been on our radar. As I said, if anyone does want to trade or invest, just be mindful of the comparatively relatively lower liquidity in this one. Also, while we are, on the subject of, chemical stocks, UPL has been a major underperformer. It's starting to show green shoots now of perhaps, recovering from here. However, 580 is a very strong supply zone. So I presume once that level is taken out, you'll see a much bigger momentum on that one. However, once bitten, twice shy, the stock has had a tendency of, giving breakouts and then perhaps not performing. So what I would do is I would wait for this 580 supply zone to be cleared and then consider a long position. And that could be for the targets of 650, as high as 650 as well. So Privy also looking good. UPL on the verge of breakout beyond 580 looks good.
All right. UPL, surprisingly, Niraj, from the bottom in March has rallied 25% since it's been taken off from the Nifty, or rather has been off the Nifty for a while, but 25% since March. Well, but let's quickly switch focus. Sector of the day, oil and gas. We've got plenty of gainers. One of the top gainers after the regulatory board raised tariffs for older petroleum product pipelines. Mihika joins in with all of those details. What impact could some of those top ones have? Mihika.
Yes, so you will see counters like Bharat Petroleum, Hindustan Petroleum and Indian Oil, trading 2 to 7% higher in trade today, and this is on the back of the Petroleum and Natural Gas Regulatory Board's latest tariff hike for the petroleum product pipelines. Now, the release did come in, on July 26, but these new guidelines are effective August 1st. Now, tariffs for the older petroleum product pipelines are set to increase 17% from next month, which is in 2 days, and the tariff for legacy pipelines is an index at 75% of basic railway freight, and from the next fiscal onwards, which is FY26, there'll be a 3.4% annual escalation for the pipeline tariffs that will take place. The main reasoning that the regulatory board did cite was that they need an independent basis to fix the pipeline tariffs because there's no assured rate of return in the railway tariffs. When you talk about the impact, this benefits companies who are involved in the pipeline transportation. These are your oil marketing companies as well as Reliance Industries. And you never know, you could see the increased costs to eventually pass on to the consumers as well.
Well, some serious moves there. Different reasons for different players. For the OMCs, maybe the crude price downtick as well does that bit of a trick. But Mika, thanks so much for putting that into perspective. Just before we hit that break, though, Aditya was surprised that neither you nor Kush picked up an OMC as an idea. Have they done their bit?
Not really, Niraj. I think there's a lot more move left. Just that too many stocks are buzzing around, too many sectors are buzzing around. Missed picking OMCs, but I think yes, definitely BPCL is something which can still be bought. I think it's a fresh breakout from a good consolidation phase. Can test levels of at least 390 to about 400 on the upside. Stay invested for slightly longer term. I would say by longer term, I just mean maybe a month or so, and put a stop loss closer to about 330, 320. And the second would be IOC. That too looks very interesting to me on the chart setup. So I think there's a big up move in IOC as well, which is coming across closer to about 210 is what I'm eyeing on IOC.
Okay. Need to slip into a quick break though. We'll take in Kush's call on some of the other PSUs name which have done really well post this break. We'll of course delve deeper into today's market movement, talk about some of the other active movers. Varun Beverages, we haven't quite discussed that. Try and talk about that as well. All right, back with India Market Close right here on NDTV Profit, and just trying to piece together some of the key results that have come out today and the stocks duly reacting as well. There is a no-brainer in Force Motors with the kind of numbers that have come out as to what that stock has done. But there is a bit of a perplexing move that we're seeing in Varun Beverages. Dharmesh Kant, Head of Equity Research at Chola Securities, joins in right now. Dharmesh, great having you. Thanks for joining in. I'll come to OMCs as well in a moment from now, but I want to start off with the results that have come out today. Did you get a chance to look at the numbers of either Varun Beverages or Force Motors or both? And can you explain the price movements and what would your view be on these stocks?
Yeah, Dr. Niraj, I had a chance to look at the numbers of Varun Beverages. And as far as stock price movement is concerned, I wish I was able to explain why this movement is happening. The only thing which comes to my mind is a slight profit taking. Because if you look at historical numbers, they have been very, very consistent. Even at these numbers were quite consistent in how they have been reporting their previous numbers and the growth outlook. The business forays has been tremendous, and their ROCE on additional cash flow which is being generated is phenomenal, around 28 to 29% kind of a return they are generating. So, well, I mean, 100 basis point, 150 basis point lower than expectation or something like this, if at all it is there on the street. Maybe I want some small, medium-term profit taking, but the company is very good. I mean, valuations can always be argued. But if one is compounding at more than 25% kind of a return on additional cash flow generated, which is again employed back into the business, the best part is that. So one should be buyer in such kind of a fall. Maybe you can wait for 4-5% more for it to acclimate. But sensing how the markets are behaving, I doubt this market will give you an opportunity to the stock to correct 4% more from here. Today should be the end of the correction for it.
So, yes, sorry, did I hear you say that this should be the end of the corrective move?
Yeah. Today, I mean,
today.
Tomorrow onwards, fresh buying should come into play.
Fresh buying should come into Varun Beverages. Okay. Yeah, I want to ask about the charts, because the charts, realistically, the charts may show a different picture than what may happen tomorrow, simply because I kind of concur here, Hersh. The numbers, I mean, except for the valuation uptick right here, right? There isn't too much, and you've looked at this more closely than I have. There isn't too much out here in Varun Beverages to complain about on the numbers delivery.
Numbers delivery, absolutely nothing to complain about. The only thing that I can possibly find from all of this, which I was trying to just before we started this show, was the kind of valuation premium it commands. 85 to 90 times is definitely expensive, but just in terms of numbers, very solid, Niraj. I mean, 28% on margins, to do that consistently and to clock growth, as well as what I was also reading was 46% of their products are non-sugar. And therefore, the diversification away from sugar also is happening. So just looking extremely strong overall, just in terms of pure numbers is what it seems.
I think it'll be lovely at some point of time for somebody, maybe we can try and do this tomorrow, to map, I'm not saying it's a one-trick pony, but to map how sales of Sting have been over the past number of years, and was that coinciding with the time that the manic moves in Varun Beverages have started? Because the stock has been a serious wealth creator in the last 36 odd months. I mean, look at the 5-year chart, if we can pull that up. I mean, Varun Beverages has been a rank outperformer. Just that kind of growth. 5 years, 1026%. That's 11x move. And quite stunning for that market cap, really.
And look at the steadiness of the move as well, right, Niraj? No big falls, even through COVID. Maybe that's that little bit of downtake, which now is looking maybe small, but
yeah, but then it might have been large.
But outside of that, fairly steady. Just the way in which that graph is currently reflecting, the way in which the returns have come, that too is quite steady.
Yeah, but fairly hefty valuations. What is not hefty, Dharmesh, and doing well today are OMCs. Now, they were touted to be the stocks of the current series, and I'll get Kush's view on that too. But fundamentally, HPCL disappointing quarter, but low oil prices helping the stock. BPCL up, IOC up. Is there more in store for oil marketing companies, fundamentally?
No, I don't think so. I mean, the only argument you can have with all the refiners is the replacement cost. So on that basis, still, 30-40% kind of move can be there in all of these counters. Other than that, as a business perspective, I don't think there's any case for fundamental, re-rating or being a wealth creator over the next 10 years. So that I seriously doubt for all these OMCs. And they are diversifying. Most of these companies are diversifying from refinery to other businesses like BPCL and all. But that's again a trade. It's more of a cyclical trade as of now rather than a fundamental investment bias. Not recommended any of them. Technical plays we did have, but nothing on the fundamental count.
Okay. Kush, you want to come in on these stocks? And is there an oil and gas favorite in your list?
Niraj, before that, I would like to just allude to something that, Aditya mentioned just a while ago, where he said, you could be invested in these for long term, and that's a month. So how definitions and how times change. But no, I kind of agree with Dharmesh here that, what's happened is that there have been sporadic moves, in some of these names. But if you see, from the start of the year, I think rarely, I think there's a rare instance where any of these stocks would be above their, starting price for this year. So I think, there could be these bouts, but then you have to take profits off the table as well. The only stock that I perhaps like in this one is IOC. It's not really seen as sharp a run-up. It's more of a steady move after a bit of a consolidation. So I think for a near-term target of about, let's say, 190 and then about 196 odd, you could trade in this one. Keep your stop losses at 178. But as I said, these are stocks where you'd want to keep, taking money off the table, not have like, roll over your position for the next 6 months. These are not those kind of stocks.
All right, point taken. Let's quickly switch focus. Kalpataru projects on the back of earnings. The company's profits fell 25% while margins also took a hit, resulting in that profit fall. We spoke to the director, Amit, on the quarter gone by and the future growth outlook. Listen into that.
This quarter was an exceptional quarter in terms of a very protracted, long election, because of which most of the government projects slowed down. There was a severe heat wave in addition to that, and a lot of the labor just was not available. This was faced by industry at large. Having said that, July already, more strength has started to come back, and we believe by August we should be on full strength. And so third, fourth quarter, we expect for revenue to bump up, and so we'll be able to maintain that 20% at the end of the year as our revenue growth compared to last year.
Okay, so quarter 3 and quarter 4, definitely the quarters to watch out for going forward. Now, what's interesting here is the key metric which you use, that is the PBT guidance, which is about 4.5 to 5%, while your EBITDA margin guidance is about 8.5 to 9%. I want to understand, there was a one point which we saw in the presentation about the new orders secured. They have better profitability going forward. So barring FY25 onwards, if we consider the next 1 to 2 years outlook, how do we see this inching upwards?
So, even now, if you see our Q1 standalone result, our PBT is at 4.4%, in spite of, a little bit of lesser revenue than guided for Q1 because of all the factors that we just discussed. I think the last 2-3 years in our energy sector, the transmission saw a dip, but for the last 6-8 months, there is a huge inflow of orders in transmission. The margins are getting better. And I think, as you mentioned, our expectation is that, as we said, we'll be in 4.5 to 5%, but going from 26 onwards, I think we should be at the upper band of that guidance and hopefully get to 5% and beyond in FY26, given that the inflow of orders is at better margins than they were the last few years.
And just a follow-up on that, what about the EBITDA margins? Can we see them going back to the 11% range?
So, we've said that because we are a diversified EPC contractor across so many sectors, right? Some have very large capex. So, for example, in urban infra, when you buy tunnel boring machines and very large HDDs, etc., your capex is very high in 1 year, depending on the kind of projects that you win. I think the right way to look at a diversified EPC business, whilst we'll try and get to a beta of 9 to 10% in the quarters to come next year. But I think if you look at from a balance sheet strength perspective, if my net working capital days are below 100 and my interest cost as a percentage of my revenue is maintained at 2% thereabouts, and my PBT is in the range of 4.5-5%, and hopefully get to 5% and a little more than that, you are getting a company with a very strong revenue growth, balanced, balance sheet, which is very, very strong, and a very profitable bottom line. I think these three outcomes in conjunction is what our focus is going forward, given that CapEx varies from type and kind of projects that we win. So that is where our focus is and will continue to be going forward.
All right, so that's Kalpataru projects. Quite bullish when it comes to their H2 numbers and expectations, which they've guided for. Dharmesh, let me come to you on this one. Power play, obviously. What do you prefer? We had two companies declaring numbers, KEC International, Kalpataru projects back to back. Between these two or any other ways to play power?
Yeah, yes. I mean, all the power generators, distributors, and ancillary equipment suppliers to power sector, I think they all have been now fairly priced. Though the structure story remains intact, there is no denial of that fact. But I think the best option to play them is to find valuation comfort. And power finances are the one where I find good amount of valuation comfort even in the current scenario. Like if you look at REC numbers, the numbers are very good. I mean, 16-17% kind of a PAT growth they have given, with 20% plus kind of an ROE. And the way the power demand is going to be there in the future with all this generation capacity coming into play, you would need at least 12 lakh crores of debt funding for all these companies. So there, I think PFC, REC plays a very strong role. They are still trading above around 20, 23 x kind of an ROE multiples they have, but they are trading below 10x. 1 year forward, they are 7.5 to 8 PE multiples. So deep value out there. And we have recommended them to our clients, both as a pair trade, to buy and buy on all declines. So it's an accumulation trade for next couple of years.
All right, thanks for that, Dharmesh. Power financiers is the way to go, likely, as per Dharmesh. But time to slip into a break. Indiabulls Housing Finance is now Samman Capital. Jio Samman se. Keep watching NDTV Profit. We'll see you on the other side with more updates, both from the derivatives segment as well as more stock-specific updates. Stay tuned.
Back with India Market Close right here on NDTV Profit. Hersh mentioned about a brief mention on the derivatives piece. Just see what's the OI concentration like, and you see that stiff resistance at the 25,000 mark, because the tallest green bar, which is the maximum call concentration, still continues to be at the 25,000 mark for the Nifty. Yesterday too, that was the case. We ended with about 80 lakh contracts, currently about 74, 75 lakh contracts. So that stubbornly stays at that 25,000 mark, something that you keenly watch out for. As we speak, IOC numbers on your screen as well. The stock marginally higher. Numbers, you could argue on that base, largely in line, nothing dramatic, but in line with what HPCL has done too. The margins have come off. But remember, OMCs are just on a different plane right now by virtue of what crude prices have presumably done, or crude prices have done, and as a result of that, presumably, OMC, BP, HP, etc., and even IOC taking a bit of a green. But speaking of, well, a rub of green, if you will, or a lot of talent, or a combination of both, we take a slight detour because it is yet another medal for India. Manu Bhakar and Sarabjot Singh won the bronze in the 10-meter air pistol mixed team shooting against South Korea. Rika Roy from NDTV Johnson to give us an update. And Rika, good afternoon. You must be as proud talking about it as I was when I mentioned this, but it's a second medal and it's great news.
Absolutely. You know, it's very hot in Paris and the Indian shooters are in red hot form. For Manu Bhaker, this is a historic medal, a historic first, I would say, since Norman Pritchard in 1900. That was before India became independent, that one athlete from the Summer Games has won 2 medals. So Manu Bhaker, after her 10-meter air pistol event, she now goes on to win the mixed event as well with Sarabjot Singh. Sarabjot, of course, turned around his disappointment of not qualifying in the final after having shot very well. His father, who's a farmer from Punjab, told him not to lose heart. He told him, "Tu kisan ka beta hai, dil mat chota karna, himmat mat harna," which means that don't be disappointed even after having delivered a splendid show. But Sarabjot turned all of that around. Both the shooters were splendid in breaking the Korean resistance this morning. It isn't easy to break down South Korea in the sport of shooting, but they were very consistent, phenomenally consistent right from the start. And Manu Bhaker and Sarabjot Singh shot a number of inner tens to able to get India its second medal at the Paris Olympic Games, which is another bronze. You know, this medal has several history attached to it. Of course, Manu becoming the only member in the Indian contingent to have 2 medals from one Summer Games. It is also the first time that a mixed shooting event has given India a medal. So great news from the Chateauroux shooting ranges for India, but the Indians have already begun their medal hunt at the Paris Games.
Well, thanks so much for that, Rika. And, Niraj, when I was listening to that, I was having goosebumps because for someone who's coming from such a tough background to be able to go there and at the highest level win a medal for your country, I think that speaks volumes about attitude and persistence that would be required to get there. And
to deliver under that pressure, Hersh.
Yes, absolutely. In a foreign country. So yes, truly commendable and truly proud moment for India. It's time to kind of switch focus, if we may. Let's try and get in Mahima, because she's going to talk about Colgate. Colgate has been on our radar since the morning. It's up 5% pretty much since the start of trade today, and very strong earnings, price hikes, and steady domestic demand. Mahima, talk to us about what's working and what's your breakdown of these numbers.
Right. So I'll start with how the Q1 FY25 for Colgate Palmolive has shaped up. Well, revenue is up 13% YOY. EBITDA is up around 22% YOY, and margins have significantly improved from 31.4% to that 34% mark. And net profits is up 33%. Now, a couple of things that have worked. Well, volume growth of 7%, 6 to 7% roughly. Now, sales growth has been in double digit for both toothpaste and toothbrush, and volume, as I mentioned, has been in a high single-digit volume growth. Rural markets have outpaced the urban markets for second quarter in a row, and EBITDA margins have expanded despite of the staff cost increase of 17% YOY and A&P spends of 10% YOY. And overall, their premium portfolio is growing faster than the overall portfolio for the company. Now, just to give you a comparison, HUL's oral care business did see a growth of mid-single digit versus that of double-digit growth for Colgate in terms of sales. In terms of their volume growth trajectory, in September 23 quarter, it was negative 1%, which has gone to 7% right now, and a couple of reasons why this volume growth has picked up. First thing, recovery in rural demand. Secondly, premiumization is something that is really working for them, and they've got products across different price bands to cater different segments. That is something that is really working for Colgate, and they've shown significant improvement in terms of brand awareness in the minds of the consumers. If we look at the EBITDA trend also, the margins are in September 23 were around 32.8, which have gone to 34% now in June 24. Couple of reasons why EBITDA margins are increasing were cost saving initiatives. First thing, they have put in efforts to remove non-value added costs, and overall raw material prices have eased for them, and also the A&P spends over quarter sequentially are coming down. Multiple brokerages have also come out with their views on Colgate. Nuvama has maintained buy with a target price of 3745, and they anticipate a balanced growth in FY25 versus pricing-led growth in FY24. What they're saying is that price hikes were taken, but over a period of time, the price hikes will not be taken. The growth will be volume-led, so it will be balanced overall. Citi has retained, however, a sell rating with a target price of 2850, and they're estimating moderation in margin expansion going ahead. Jefferies on Colgate, on the other hand, has a buy rating with a target price of 3570, which is an upside of 13% from yesterday's closing, of course. What they're saying is that pickup in rural is working for them, and strong execution by the company is also working for them, and higher than expected gross margins is for this quarter has come out, and they've upgraded their EPS estimates by 6% roughly. Lastly, Nomura on Colgate, very interesting note. However, they also have a sell rating with a target price of 2,800, and they believe that sales value growth could moderate in high single digits going forward, and they believe that the company has clawed back more than margins than they lost in FY22-23. And lastly, if we see the valuations, currently it's trading at 70 times PE. However, going forward, as per Bloomberg estimates, 25 estimates show it will go to 61 times, and 26 estimates show it'll go to around 55 times. And lastly, just to conclude what analyst recommendations are as per Bloomberg, well, 8 say buy, 13 say hold, and sell calls are more, which is around 14, and the return potential is downside of 10.5%. So this is the overall view of how Colgate has performed in Q1 FY25 and how the outlook looks like for the company.
All right, thank you so much for that detailed roundup, Mahima. Let me also quickly mark out the earnings at the bottom of your screen. Ajanta Pharma, strong set of numbers, profits up 18% odd, EBITDA was up 22% if I recall right, margins consolidating, getting better, 28.9% versus 26.6% on a year-on-year basis. So looking strong right off the bat, 4% plus higher. And you can see the spike on the stock on the back of those numbers. But Dharmesh, let me come to you with regard to Colgate in particular. Several levers which have worked this quarter. One, sustainable. Second, are valuations elevated? Is the rural play already built into the valuation currently? 70 times current, 61 times forward?
See, yes, the only jitters with Colgate a couple of years back was Patanjali eating into the market share, and they may not be able to regain the growth momentum, which they have done. I mean, this thread they have, tackled very well, and they are back on the growth trajectory. The re-rating which has to happen has happened. I mean, now every HUL, Colgate, Gillette, all are trading above 60 PER, 1 year forward kind of a P multiples. And there, I think this year itself, I think Colgate has moved more than 70%. So if a company volume growth is in high single digit and put together the price appreciation, you cannot grow more than 10-12%. I understand the ROE matrix because it's a debt-free company, use cash generation, and ROE is still 75. So this 5 P multiple re-rating can still happen, which can entail again, 10, 15 or 20% kind of a price appreciation. Beyond that, I don't think there is much upside left. So it's more of a trade from here for next 10, 15 percentage point kind of an up move. Rest all, I think it will be even out.
Kush, if it's a trade, let me come to you.
Well, Hersh, we've been discussing Colgate since the levels of 2,400. I think now I fall in the camp where, the RSI has hit, overheated territories on multiple time frames, be it daily, weekly, monthly. So I think, to the consensus trade, you can add my name where this is a good buy, but on dips. Anywhere close to, 3100, 3150 kind of levels on profit booking is where you can re-enter Colgate. It has a tendency of giving you those, dips as well. So at the moment, my suggestion would be to take some money off the table, book profits, and wait for a dip closer to 3100, 3150 zones and re-enter.
Okay, some stocks which have flown. So, TARC, which is the offshoot of from Anant Raj, that stock is up about 4% or 5% as we speak. 209. Actually, it's a 5% up, not 3.29%, but has done well. So that's one stock to watch out for. HFCL up about 4.5%. That's done very well. And like we mentioned in the morning, Suzlon is up under 5% at 68.22. Unless I'm wrong, it's locked on a circuit again. Suzlon, look at that move, and look at the 1 week or a 10-day or a 1 month move in Suzlon. From about 55 odd levels where it was finding resistance, I think the stock has now had a near one-way move all the way to 68. Some really sharp moves there. 1 week, about 18%. So these few names have done very well for themselves. Aditya, Suzlon is on an upper circuit, of course, so I'm guessing there is optimism there. But between a Suzlon or an HFCL, anything that stands out?
HFCL, I think, Niraj, is something definitely which stands out for me. Suzlon, not predominantly because, as you mentioned, it's clearly run up a lot from 55 odd levels to 68. Now, I wouldn't be too much interested in Suzlon. But HFCL, definitely, even at current levels, I think so it's a very good buy for a target of at least 180 to about 200 on the upside, with a downside support at 120. One more stock, if I can add to that list, is Global Spirit. This is one stock which has suddenly popped up and then looks very interesting to me on the chart setup. We are seeing good volume-backed buying. Stock is up around 8.5%, broken out from a consolidation phase. I think it does definitely tick marks all the check boxes, and I think at current levels one can definitely look at buying Global Spirit for a target of at least 1150 on the upside, with a downside support at around 840. So Global Spirit is something which is looking very interesting to me on the chart setup.
Just viewers, keep in mind the Bank Nifty seems to be finding that pressure at 52,000 because it's flattened out completely. It's taken the markets down along with it. Even yesterday, the intraday correction happened because of the Bank Nifty correcting. And even right now, it's just come off from nearing that 52,000 mark now. So while in the green, about 0.19 or 0.2%, it's certainly significantly off from the highs of the day. So the beliefs of nudging 25,000, sadly, Hersh, are put paid to.
Absolutely.
At least for today.
Yes. So the battle between Kosh and Aditya seems to be settled. At least for the moment. We still have maybe 12 minutes to go, but yes. So apologies for that. Anyway, let's
that's fine.
Let's switch focus. Sorry, yeah, please go ahead.
We're friends and colleagues. We'd more than welcome this battle. So yeah, no apologies needed, Hersh.
Just friendly banter. Perfect. Okay, good. Let's pick up Tata Motors, because the auto stock, or rather the Nifty Auto, is the top performing index on the sectoral among sectoral indices today, and Tata Motors ruling the roost, pushing that Nifty Auto and aiding it higher, likely. Now, all-time high today, of course. Puneet joining us with the key triggers and a preview ahead of Q1 earnings. Puneet.
Yeah, thanks for that. So there are multiple triggers that might be leading to the stock, hitting an all-time high today. The first one is, of course, this Nomura report, which came late last week, that triggered the stock up roughly 6%. Now, basically, they upgraded the stock from a neutral rating to a buy, and they've upgraded the target price to 1,294 rupees per share. This was earlier around 1,191 rupees per share as well, implicating quite a big upside when the report had come out at that time of roughly 20 to 25%. Now, they had basically written on JLR and one of the key divisions going forward as well. They see the premiumization in Jaguar as well as Land Rover models going forward as well as being one of the key triggers, which will be led by higher average selling prices as well as margins. And they had raised the target multiple of the JLR division to 3.5 times its EV by EBITDA from roughly 2.7 times. The other thing is, of course, the key earnings. Now, this week, all passenger vehicle makers will report its earnings, and we'll start with Maruti and Mahindra tomorrow. Tata Motors is going to follow suit on Thursday on the 1st of August, and is expected expected to be a very good quarter on the bottom line for the company. Revenue is expected to rise by around mid-single digit, around 6 to 7%. But margins are expected to rise by roughly 16% to come in at above 14%. And profitability is expected to rise by roughly 50 to 60% as per Bloomberg estimates to come in at roughly 5,000 odd crores in this particular quarter. When you look at the other key triggers for the stock, is of course new launches. We didn't have any launch in the previous year for Tata Motors, and this year they're going to be starting with the Curve EV, which will be launched on the 7th of August. Now initially it seems like it's going to be priced at a premium above the 12 lakh odd range, but we'll still wait for more details, and the street is abuzz because this will really of course be a very big launch after the Nexon. So post the Nexon, which came around 4 odd years ago, they've had launches of the Punch EV, but that's been sub 10 lakh rupees. So this is going to be another premium launch by the company, and they're expecting to clock in very healthy volumes and are very positive on the same. Do note that they're also launching this Curve in the ICE variants, which is petrol and diesel, later this year, as well as expecting to launch the Harrier electric vehicle as well. So multiple launches planned. The first one is in August itself, on August 7th. The fourth one, of course, could be the July monthly sales. Now sales are expected to be largely flat, but the key commentary that will come in post the earnings, as well as they've mentioned that they've introduced some discounts for certain models such as the Punch as well. We'll see how the market is reacting to these, and finally potentially could be we'll see if we can get an update from Tata Motors on the conversion plan of the Tata Motors DVR shares. Now this has already been the resolution plan was passed in May of 2024. The swap ratio is roughly 7 shares of Tata Motors for 10 shares of the DVR. Now if this finally comes through, this will be another making the succession planning and the structure very simple, but we've seen that the premium between both the shares are reduced. So a few triggers that we think might have triggered the stock up. We're expecting some good commentary from them post the results, as well as the sales and numbers, which will come out on Thursday itself. Back to you.
Okay, thanks a lot, Puneet. Dharmesh, before we thank you, auto majors, Tata Motors numbers day after, but M&M, Maruti tomorrow. Are you bullish?
See, Niraj, as far as valuation is concerned, I think Tata Motors still has a scope out there. Maruti and M&M are priced to perfection. And the key triggers for most of the auto majors would be, one is thankfully international prices of commodities have cooled off. The spike which we saw in the month of March and April has come down. So for year till date, most of them are flattish. So commodity inflation won't be hurting their margins going forward into Q3. Q2 may still be a trouble point for them. And the other expectation of interest rate cuts globally is again going to help them out. And for Tata Motors, why we are actually bullish on is the SOTP based target price is 1350 to 1400. So this demerger of businesses has also helped them take on the valuation gap. So these are the levers where I think on the CV side and PV side, Tata Motors stands the best chance for a re-rating.
All right, so chance for a re-rating on Tata Motors still. Let me first off thank you, Dharmesh, for joining us, speaking with us and giving us your views. We'll let you go on this one. But we have Puneet still with us. Puneet, Exide top loser. The numbers itself are not encouraging. Talk to us about what's the real miss and whether there are absolutely any hits to take from this. The top loser on the Nifty Auto today.
Yeah, definitely. It's grown from the previous year, but yes, of course, the estimates were much higher for Exide Industries. When you look at the revenue, it grew roughly 5.8% to come in at roughly 4,300 odd crores. Now this is below the Bloomberg estimates of roughly 4,427 odd crores for the standalone business. EBITDA margins rose 15% to come in at 494 odd crores, but this is much below the estimates of 588 odd crores. While margins were expected to be around the 13% range, that has come down at roughly 11.4% versus 10.6%. So surely growth over the last year, but much below expectations. Profitability, that's why coming at 280 odd crores versus 328 odd crores. The one update that the company has given in this particular quarter has been that they've invested around 275 odd crores. So 200 crores in quarter one, and in July they've invested 75 crores in their lithium-ion subsidiary. Now this is Exide Energy Solutions Limited. Overall, they've taken the total investments investments over the last 12 to 18 months to around 2,577 odd crores in this business. Now, we will be waiting for the commentary as well as the investor presentation to know what's the update on this particular division, because back in March they had signed an agreement with Hyundai for supplying the EV batteries going forward as well as the commercialization of this plant is expected by the fourth quarter of this fiscal year. So some more update on this new business will be key, but traditionally the numbers as a whole are disappointing, and that's why it's the one of the big losers in trade today. Back to you.
All right, thanks, Puneet. Quite a miss there. Let me go across to Aditya. Aditya, your views on some of these auto stocks, both Tata Motors as well as Exide or any others, which you are finding interesting on charts?
Most of them have run up. If I talk about auto stocks, especially the four-wheeler ones, Hersh, they've run up a lot. Tata Motors, to me, at current levels, I would not venture out and buy Tata Motors because this is something which you recommended long back. Maruti is something which still can be bought at current levels, and for a target of 13,500, about 14,000 on the upside. On the downside, 12,700 is a good support area. So the risk reward still favors Maruti Suzuki. That is something that I would like to go ahead and buy. And as far as these battery stocks are concerned, they had run up too much ahead of its time, I guess, Hersh. And they were trading at extreme overbought levels. Rather, there were negative divergences which had started building on. So this kind of a corrective move was coming. I'm not saying that this is the end of the up move, but it can further correct to 500 odd levels. Between 500 to about 490 is a good support area for Exide Industries. So I would let the stock to correct to those levels and then maybe look at initiating fresh long positions. I would rather stick to auto plays and look at four-wheeler stocks rather than looking at the battery and the other ancillary stocks at current levels.
All right, we have just 3 minutes to close. Kush, let me come to you on your picks. BTST.
Well, apart from the ones that already mentioned, Kacharia as a buy and Jindal as a sell, I think one other stock that's looking interesting is NLC India. Paid its dues, seen a round of profit booking, 20-day moving average support, and the stocks rebounded. I think it's poised for another leg of a sharp up move where it can gain as much as perhaps 15, even 20%, in the coming months. For the near term, if someone wants to play, then 310 is your target. And, you could keep a strict stop loss just under 285. So the risk reward ratio here is extremely favorable. NLC India setting up for a big move.
Okay, Aditya, yours, any STBT, BTST?
I've got a couple of them, Harsh. The first one is JK Lakshmi Cement. I think stock is gearing up for a big breakout from a flag pattern. For a target of 1,000 rupees with a stop loss at 850, one can definitely look at going long on JK Lakshmi Cement. The second is Navin Fluorine, again from this chemical stocks. Most of them are looking very interesting to me. So Navin Fluorine is a buy at current levels for a target of 4,000 on the upside with a stop loss at the downside at 3,700.
All right, thank you both of you, Aditya as well as Kush, for staying with us over the last hour or so, giving us all of those insights. But we're very, very close to close now, just about 2 minutes to close. Let's quickly pull up the Nifty 50 as flat as it can be in trade today. We've given up 24,850 as well. The Nifty Bank too absolutely flat, no support coming there from the Nifty Bank, which was what was likely if at all we were to hit 25,000. The Nifty Bank was to support, but that's not really happened, and therefore we are flat as ever. Let's pull up the heat map. Some names in focus, of course. We'll have Tata Consumer declaring numbers tomorrow, so we'll have to have our eye out on that one. But LTI, Mindtree, SBI Life are the two stocks which are the top laggards on the Nifty 50 in terms of gainers. Tata Motors 3.5% higher, but outside of that, you're seeing OMCs in focus, some bit of power with NTPC and Power Grid, both the PSUs leading the pack. Just in terms of earnings, we'll have Maruti in focus as well, up 1%. Tata Motors, of course, will also be in focus on numbers, and we'll possibly also have some more stocks in focus due to numbers. Now, just in terms of a couple of other ones, we have ITC, which has declared dividend today, or rather, which has paid out dividend to shareholders today. So that one was in focus as well. Let's pull up the Nifty, the broader markets, and let's start off with the Nifty Mid Cap. What that one is closing in at around 0.5% higher on the Nifty Mid Cap. The Nifty Small Cap also in the green, so around 0.8% higher. Let's pull up the advanced decline, which pretty much through the day has been in favor of the advances, as was the case yesterday. We've closed very, very close to pretty much the same number yesterday, if I recall right. So it's pretty much a flat day when it comes to the markets itself in terms of the benchmark. The Nifty mid cap and small cap is where some of the action was. Let's pull up the BSE 500 to close this and to wrap this up. In terms of the top gainers and losers on the BSE 500, we've closed for the day. Alembic Pharma in focus. Varun Beverages post numbers really foxed us because the numbers were absolutely solid. Exide down 3.5%, 4% lower on CSB Bank for a second consecutive day. Punjab and Sindh also down roughly 3%. Pune Elephant Corp down 3%. In terms of the gainers, PCBL, Polyplex, Fine Organics up 9%. On the back of both numbers as well as chemicals being in focus, more so the latter. Nykaa up 9 as well in trade today. So some good buzzers within that broader market space. Let's last off pull up the sectoral heat map and try and see which ones have gained. The Nifty Energy has closed 1% higher, but outside of that, PSU maybe a bit. Outside of that, we've not seen much action. Auto was up 0.6 despite a very strong performance from Tata Motors in trade today. Realty is up just about 0.5% or thereabouts. In terms of the losers, FMCG, Pharma, IT, the top three in terms of the sectoral losers. Pharma down 0.7 despite chemicals doing well. But anyway, that's a wrap from all of us. Niraj, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.
The market ends flat as Reliance and ITC drag the indices lower. Nifty Auto hits a record intraday high. Mid and small cap indices hit record highs. Manu Bhaker and Sarabjot Singh clinch bronze at the Paris Olympics. Bhaker scripts history by becoming the first Indian woman to win 2 medals in single Olympics. Prime Minister Modi calls on the private sector to participate in creating Viksit Bharat amidst a discussion on the need for capex to pick up. Finance Minister Nirmala Sitharaman is set to reply to the budget discussion in Parliament. She will answer questions regarding Budget 2024. Map My India sends a legal notice to Ola Electric, alleges that Ola Maps copied the data and breached the agreement. Ola Electric denies the allegations, calls them false, malicious and misleading. Adani Wilmar reports strong first quarter earnings. EBITDA jumps 375% while margins grow by over 3%. Volumes grow 12% compared to last year. 84 people are killed and hundreds are still trapped after 3 landslides hit Kerala's Wayanad district. Amid heavy rain, rescue operations continue.